Okay, so let's discuss the case study on joint and byproduct. Another very interesting case study on joint and byproducts. Let's start with this. Pokemon Chocolates manufactures and distributes chocolate products. It purchases the cocoa beans and processes them into two intermediate products, that is the chocolate powder liquor base and the milk chocolate liquor base, right? So what they are saying is that what they buy is they buy cocoa beans, okay, from which, so they are buying the cocoa beans, and from cocoa beans they are manufacturing two products. Okay, what are the two products that they are manufacturing? They are manufacturing chocolate powder liquor base. So they are manufacturing chocolate powder liquor base, and the second thing that they are manufacturing from this is milk chocolate liquor base. Okay, so second thing is milk chocolate liquor base, right? So these are the two things that they are manufacturing from cocoa beans. Fine, sir. What is the information further? These two intermediate products become separately identifiable at a single split off point. Every 500 pounds of the cocoa beans yields 20 gallons of the chocolate powder liquor base and 30 gallons of the milk chocolate liquor base. So they say if we process 500 pounds of the cocoa beans, what is the output that we get? We get 20 gallons. We get 20 gallons of this chocolate powder liquor base and 30 gallons. Yes. So we get 30 gallons of the milk chocolate liquor base by processing how much cocoa beans? By processing 500 pounds of cocoa beans. Clear with this? Okay, next they say the chocolate powder liquor base is further processed into chocolate powder. They say this chocolate powder liquor base, we process it further, and after further processing what we get? We get only chocolate powder now. What you will get is, you will get only chocolate powder, right? This is what you get after further processing. Okay, every 20 gallons of the chocolate powder liquor base yields 200 pounds of the chocolate powder. So they say this 20 gallons of the liquor base, you process it further, get chocolate powder. How much of the chocolate powder you will get? You will get 200 pounds. You will get 200 pounds of the chocolate powder. I'm just writing down whatever the information is given. I'm not doing anything else. Whatever the information is given, I'm interpreting that and writing it down. Next, the milk chocolate liquor base is further processed into milk chocolate. Fine, sir. This milk chocolate liquor base, this is also getting converted. This is also getting converted into milk chocolate. Milk powder or milk chocolate? What is given? Milk chocolate. Okay, what is the name given is? So it is further converted into milk chocolate. Fine. Further he says every 30 gallons of the milk chocolate liquor base yields 340 pounds of the milk chocolate. That means this 30 gallons, if you process this 30 gallons, how much of the milk chocolate that you get out of it? That is 340 pounds. Okay, so this information is, if you process 500 pounds of the cocoa beans, first you get liquor bases, then you further process the liquor bases into the chocolate powder and milk chocolate. Now, the production and sales data for the month of October 23 are given that cocoa beans processed is 7,500 pounds. That actual number of beans that has been processed is 7,500 pounds. The cost of processing the cocoa beans up to split off point is 7,12,500. That means this is your joint cost that is given to you, including the purchase of beans. Now, the chocolate powder means this part, this last part, chocolate powder. After further processing, the production is 3,000 pounds, sale is 3,000 pounds. Whatever you are producing, you are selling everything. Selling price is 190 per pound. Milk chocolate 5100 pounds, sold 5100 pounds, and the selling price is 237.5 per pound. This is what? This is your final product. This is your final product, that is after further processing. This is the final product that you are manufacturing and selling. The October 2023 separable cost of processing the chocolate powder liquor base into chocolate powder are 3,02,812.5. Now what is this? What is this? This is the cost of converting the liquor base into chocolate powder. This part. Now, what is the cost here? What do you call it? You call it as further processing cost, and this is the FPC that is given to you, 3,12,812.5. This is your further processing cost. The October 23 separable cost of processing milk chocolate liquor base into milk chocolate are 6,23,437.5. Again, your FPC. Right? Joint cost is given to you. Further processing cost is given to you. Pokemon full processes both of its intermediate products into chocolate powder and milk chocolate. That is, they are processing everything. There is an active market for these intermediate products also. This company is further processing, but they say there is an active market for what? For this also, for the liquor bases also there is an active market. Okay. What is the information regarding that? In October 23, the Pokemon could have sold the chocolate powder liquor base for 997.5 a gallon. That means the selling price of this product at split off point is 997.50. They say the company could have sold this liquor basis as such without further processing it into chocolate powder. If they sell this at split off point, they would have sold it at split off point. So if they sell this at split off point, the selling price is 997.5. Okay, fine. And similarly, it is given, and the milk chocolate liquor base for 1235 a gallon. 1235. So for this, the selling price is 1235. Clear? So this becomes what? This becomes your selling price per gallon at split off point. Fine, you are required to show how the joint cost of 7,12,500 would be allocated between the chocolate powder and milk chocolate liquor bases. Right? That how this joint cost of 7,12,500, here you have a joint cost, of 7,12,500. How you are going to distribute between these two, between the two liquor bases? Let's see what are the bases they are asking for. First, they say how much of the joint cost is allocated between the chocolate powder and the milk chocolate liquor bases respectively using the sales value at split off point. Now what they are saying, it is the sales value at split off point. At split off point means they will not be doing any further processing, right? Secondly, they are asking for the liquor basis only. How will you do it? At split off point, how will you do it? Let's try to understand it. So first part is at split off point. How will you treat it at split off point? Very, very easy. Right? I'll take chocolate liquor base and I will take milk liquor base. How will you do now? Just try to understand. We say that first we had to find out what is the actual quantity. What is the actual quantity, actual number of gallons being produced. They say if you process 500 pounds of cocoa beans, how much of the chocolate liquor you get? That is 20 gallons. That is 20 gallons. What is the actual number of cocoa beans that you have processed? That is 7,500 pounds. So that means what is the number of gallons that you have produced? What is the total number of gallons that you have produced? That is 20 divided by 500 multiplied by 7,500. That comes to 300 gallons. This is what you have produced and sold. Now, what will be the selling price at split off point? Just think very carefully. What will be the selling price at split off point? At split off point, these are the products. The selling price is this one, 997.5 and 1235. So here also for the milk chocolate also will say for 500 pounds of cocoa beans, how much of the milk chocolate is produced? That is 30 gallons, as already explained. For actual 7,500 pounds of cocoa beans processed, how many gallons? That is 30 divided by 500 multiplied by 7,500. So 30 divided by 500, that comes to 450 gallons. Now, the joint cost is to be distributed on what basis? It is to be distributed on the basis of the sales value. Sales value means the quantity multiplied by the selling price. So, what is the selling price here? The selling price here is 997.5, right? And here it will be multiplied by 1235. So, what is your sales value that you will get? Sales value. That will be 300 multiplied by this. That comes to 2,99,250. And 450 multiplied by 1235, that comes to 5,55,750. Now the joint cost of 7,12,500 is to be distributed in this ratio. Right? So what will be the joint cost distribution now? The joint cost of 7,12,500 will be distributed in the ratio of 2,99,250 is to 5,55,750. Right? So what the answer that you will get is 2,49,375 and 4,63,125. Clear, guys? So this is at split off point. Sales value at split off point. Sales value of what at split off point? You have two products. One is the chocolate powder liquor base. Second one is the milk chocolate liquor base. Selling price at split off point are given to you. That is 997.5 and 1235. So first we calculated what is the total number of gallons of these liquor bases which has been produced, multiplied by the selling price. That will give you the sales value. One thing you have to be very careful about here is they are not asking you to distribute on the basis of the selling price. There is a difference between the selling price and the sales value. Sales value means quantity multiplied by the price, because these are the small mistakes that you might commit, right? So this is where we have to be very careful. So 249,375. So we have option B. Clear. Next one is how much of the joint cost is allocated between the chocolate powder and the milk chocolate liquor bases using the physical measure, gallons. What is the physical measure? How many units or how many gallons you have produced? That is the physical units. So the physical units here is we have actually manufactured 300 gallons and 450 gallons, right? So these are what? These are your physical units that you have actually manufactured, right? So you will distribute 7,12,500 in the ratio of 300 is to 450, right? So 10 divided by 750 into 300, that comes to 2,85,000. That means we have option D. No need to calculate for. I just calculated for one, 2,85,000. Right. For other also, if you want to check, divided by 750 multiplied by 450, that comes to 4,27,500. So we have option D on the basis of the physical units method. Right. Physical measure means the physical units method itself. Measure means the units. Is that clear, everyone? Okay, let's come to the third part. How much of the joint cost is allocated between the chocolate powder and the milk powder liquor bases respectively using the estimated net realizable value, that is NRV. How do we calculate NRV? NRV says final sales value minus the FPC, isn't it? That is your net realizable value. Okay, so for NRV, we'll solve third part. Third part is on the basis of NRV, chocolate liquor base and milk liquor base, right? So what we have to take? we have to take final sales value. Final sales value. Now, what will be the final sales value, guys? The final sales value means the final product that the company is manufacturing. The final product here is what? Whether it is the liquor base final or it is the chocolate powder and the milk chocolate, which is the final. Final here means this last step, chocolate powder and milk chocolate. So we have to calculate the final sales. Final sales, how will you calculate? It is given here, 3000 pounds multiplied by 190 and 5100 pounds multiplied by 237.5. So this will be your final sales value. Here it will be 3000 multiplied by 190, and here it will be 5100 pounds multiplied by 237.5, right? So 3000 multiplied by 190 will give you 5,70,000, right? And this will give you 5100 multiplied by 237.5, that comes to 12,11,250. Now from this I will subtract what? I will subtract my further processing cost, and further processing cost is already mentioned here. This is your further processing cost, right? So I will subtract the further processing cost from this. I'll take 0.00, 0.00. So FPC is how much? 3,02,812.5, and for the other one it is 6,23,437.50. So this will give you the NRV, that is net realizable value, that is 2,67,187.5. 812.5. Now this NRV becomes what? This NRV becomes the ratio in which the joint cost will be distributed. Now this is the ratio here. That is why I marked it. So what will be the joint cost to distribution here? Joint cost of 7,12,500 will be distributed in this ratio now. So after distribution it will be 2,22,656.25, and here it will be 4,89,843.75. Let's see the answer. So what is that option that we have? 2,22,000, that is option A. Clear? So be very careful with the NRV. The NRV says the final sales value minus FPC, that is your net realizable value. That is your net realizable value. In that ratio you have to distribute your joint cost. Clear with this? Fine, sir. Now what is the constant gross margin percentage, NRV? Right? So what does it mean? That what is the gross profit that you are earning, sir? Gross profit here means what? Using the NRV, that is the final sales value, take the total of this. The total of this is 5,70,000 plus 12,11,250. That comes to 17,81,250. This is your sales value. From sales, if I subtract my all the cost means if I subtract my FPC, if I subtract my joint cost, I will get the gross profit. Yes or no? Right? So 3,02,812.5 plus 6,23,437.5, that comes to 9,26,250. 9,26,250. So I will subtract this. Then I will subtract this also. This one comes to 7,12,500. From sales, if I subtract my cost, will I get my gross profit? Gross margin. Right? No other expenses, just these expenses. If I subtract, I'll get 1,42,500. Right? Just check once. I think this is the figure that we'll get. Okay, I'll check. 17,81,250 minus 9,26,250 minus 7,12,500. Correct. 1,42,500. This is your gross margin. So what they are asking for in the fourth part is what is the gross margin percentage? So we'll calculate gross margin percentage. That will be 1,42,500 on a sales is 17,81,250. 17,81,250 multiplied by 100. So divided by 17,81,250 multiplied by 100, that comes to 8%. This is your gross profit. This is the profit percentage, basically option A. Right, option A. Coming to the last one, he says, how much of the joint cost is allocated between the chocolate powder and milk chocolate liquor bases respectively using the constant gross margin percentage NRV. So what they are asking about, basically they are asking about, they say the NRV is given, the profit margin is given. So what I told you, if the sales are given, if the profit margin is given, what is that method called? What is that method called? What is that method called? That method is called the reverse cost method. What is that method called? That is the reverse cost method. That is what is to be applied here. So fourth part, reverse cost fifth part, reverse cost method, CLB, chocolate liquor base, milk liquor base, MLB, right? What do you have? You have the final sales value, because we have to do it using NRV. In NRV, we have to always use the final sales value, sir. Final sales value we have calculated here, 570 and 1211, 250. So 5,70,000 and 12,11,250. Now from this I will subtract what? I will subtract my profit at the rate of 8%, right? So that comes to 45,600 is my profit, and 12,11,250, 8%, that is 96,900 will be the profit. Now from sales, if I subtract my profit, what will I get? I will get my total cost. I will get my total cost, that is 5,70,000 minus 45,600, 5,24,400. And here I have 12,11,250 minus 96,900, that is 11,14,350. This is your total cost. This total cost means the joint cost plus FPC. This is your total cost, right? Now from this total cost, if I subtract my further processing cost, further processing cost is what? 3,02,812.5. and here it is 6,23,437.5. So what will be left? You will be left with share in joint cost. Simple. From total cost, if you subtract your further processing cost, what is left? The share in the joint cost directly, that is 2,21,587.5 and 4,90,912.5. 2,21,587 and 4,90,912.5, that is option C. Clear? So the interpretation holds the key. The interpretation is going to be important, that how you interpret the question, that is going to be the key. You need to understand very carefully whatever the language they are using. You try to understand the language, then how to apply that language in whatever the concepts that we have studied, right? That is going to be the key here. Clear? Please revise this case study thoroughly once. It's a very, very good case study, very important case study on joint and byproducts, right? So we are done with the joint and byproducts case study. Next, we'll be taking up standard costing, one of the most interesting chapters. Seems to be difficult, we'll make it super easy, right? So nothing to worry. Let's go for the next one.